Hello viewers and a good afternoon to you all from the UK. I'm Stephen Hode, aka TheStopHunter, and we've got something new for you now. A new bit of analysis, something new for the calendar. It's all about gold and silver. Now, I've traded gold and silver futures and options professionally on the desk, in my trading history. So hopefully I've got a bit of background experience to share with you in the analysis, but I do know there's a lot of factors now that go into trading both those metals. In the old days, it was a different kettle of fish. Sometimes things like seasonality, economic stuff was far more transparent, more volatility, more predictable volatility, making it a nicer one to trade. It's a bit harder, like I said, these days. So hopefully we're going to focus in on the key variables to find out where those metals are going next. Now, I'm going to be using mostly technical analysis for this. I'm going to take out a lot of those behind the scene variables. And you might ask me what my preference is over gold and silver. Well, as we'll see in a minute, they're highly correlated, but I prefer silver over gold. It's like gold's baby sister, throws the odd tantrum every now and again, goes off on its own. But the reason I like silver, it is more, I suppose, industrial based and looks to me like it could be set for, more demand, more growth over the next 5 years, because it's now a key element in stuff like semiconductors, solar power, medicines. It's got an industrial use to it and a growing industrial use. So that's why I like it a bit more over gold. But then that will get impacted more on, how the economy is doing. So it's, horses for courses, but like I said, I prefer silver. But we're going to cover both off in this session. So let's get straight into it, and we are going to head into my overall world commodity futures view, performance index of 2023. Where is silver and gold in the mix? Well, silver, if we can find it, only up, you can just see there, 1.41% over the year, so nothing spectacular. And I think gold is probably just a bit above that, 7.5%. So if you compare it to the top guy there, orange juice up 54%, cocoa up 38%. It hasn't performed that well. Or even if you compare it to, say, the stock market's S&P 500, it's probably up about 17-18% as well. The Nasdaq up 30 odd 40%. So as a performance commodity play this year, it's been pretty flat for both. Gold slightly better, but puts in perspective. I like to see that, see the relative value of commodities against one another. But another thing I just want to cover off is the correlation between the two metals. Now you see the yellow line, that's the price of gold, and the grey silver line, price of silver. It's a daily chart. Down the bottom is the correlation between the two, and you can see that at the moment it's 0.74 plus 0.74, a very strong correlation between the two. So like I said in the intro there, silver does go off and throw a bit of a mood every now and again, and you can see that in those dips in the correlation there, but more often than not it's highly correlated to gold. So it's up to you what you want to play. There's different reasons for playing both, but technically very similar. But like I said again in the introduction, I think there's different fundamentals to silver that make it more attractive for me. There's also something else that you might look at. It's called the gold-silver ratio. Now, this probably is more for those who've got a mean reverting type strategy. It's just showing you how many ounces of silver by 1 ounce of gold. At the moment, it's about 81. And you can see we go all the way back here to the mid-70s. And that boundary don't really go up past 100, or very rarely. You see twice there in the last 50 years nearly. And then the same to the downside, doesn't really go below 50 that much either. But this is a very long-term monthly view. You can shorten the ratio down to days, weeks. Mean reverting type trade. Now this is a 2 standard deviation regression band. You could maybe trade you know, like I said, those corrections, once they break out of that, you know, range, that hit a certain point and revert on back. But just another interesting, you might hear the gold silver ratio talked about a lot, and that's all it is. It's just the you know, gold price divided by the silver price to give you that sort of analysis. More popular in the old days when we ran off the gold standard, but again, you could get a sort of mean reverting trade out of that. And just another thing I like to have a quick look at, see where we're at the moment. Pretty, so I say, smack bang in the middle of things, really, at that mean point. So what have we got? We're going to flick between gold and silver, in and out. At the moment, this is gold today. What's been going on? Well, it's been heading off since about 7:30 UK time this morning, off down to this pivot point, sort of 1960 zone. Now, if we can see the indicators, the trend there, week, various short entry points there in on today. So looking weak Monday. Remember, it's bank holiday in the US, so that volume's taken out of the market. Same picture, unsurprisingly, for silver. We've seen again, you know, bearish trend today. A couple of short opportunities in there, and it's sort of settling around this, you know, at time of producing this video, around about 24.30 cents, 24, 36, 35, somewhere around there. Momentum, is it going to break down? We've got other pivots down there sitting on the silver one, about 24, just over $24. So sorry, 24 cents. So yeah, interesting. Sorry, $24. Get it right in a minute. Yeah, so that's this morning's, well, the day's activities so far. Bit bearish. Let's get into some longer term stuff. Bit of sentiment on the gold front. We've got seasonality down the bottom. What happens at this time of year? Well, the answer is not a lot, really. Pretty flat. In the old days, this used to be a great seasonality play, you know, through the we call it the Christmassy period, due to, you know, religious events, etc., Indian buying, that sort of thing at that time of year, and that was in around there. Still a bit of an uptrend there, but at the moment it's a harder one to play. At the moment, we've got this sort of, when you see on the bottom left there, downward looking trend on the seasonality, so nothing too exciting to pull from there. Above that, we've got the commitment to traders, the large speculators. Which way are they facing at the moment? Yeah, we'd see probably them heading the same way as the actual price above. We've got them coming down there, as we can see, with the price coming down, and then just starting to build the longer position in there again, as we've seen that price going back up to the 1970 sort of area. And what about silver? It's slightly different on the seasonality. Again, it's a flat period at the moment. You know, as a jewelry, you know, seasonal play in the old days, it wasn't as strong. Flat at the moment, like I said, and it's a lot more of a bumpy ride, you know, over any given year in the price of silver. So we're going to head up into the commitment of traders data, and we're seeing a, you know, correlation between the price coming down there and then up to the large speculators going down and then building up their long positions once more. Positive long positions, you know, 28,000. Yeah, so takeaways from the commitment of traders for silver, maybe say weak bullish there, seasonality flat, flipping back to the gold, same sort of story, seasonality flat, and maybe a bit weaker in the commitment of traders, that the long positions starting to build slowly there. And then what have we got? We've got some longer term price action. We've got the gold futures weekly chart here. We've got volume at price. We go back to about 2014. Let's put on, so well, we've got this, well, first of all, I'm not even going to put that on yet. Look at those nice highs there, all around 2,100 sort of area. Just, well, it's just a bit below that, 2,090, 2,100. 3 times it struggled to break that. We got the lows down here, December 2015 or about 1050. Let's do it that way around. Let's take that high there, join that in. And what does that give us? Well, obviously the important level for everyone is that 2080, 2100 mark for it to push on to 2350. But like I said, it keeps failing there and then pulling off back, and it looks like this sort of box range here is what's at play, and that goes down to about 1650. Or you could just maybe take that key 61.8% Fibonacci line, 1687, they call it 1700 if you took out some of those spikes in the price there. So a range between 2100 and 1700 seems to be the way it's playing at the moment for gold. And in the short term, down the bottom there, indicator is bearish, so looking for 1860 to the downside of support, and like I said, the upside, if it can turn around, 2080, 2100. So that's gold. Let's have a quick look at silver. A similar shape, but not as, I would say, nicer shape as gold. You had this more dramatic rise up around April 2020, and then again you've got a block of price action. I'd say it's probably weak price action there. Highs in at just over $30. Let's take that from the high to the low, drag that out. You know, a bit like gold, it did struggle to break those highs. There was a lot of talk earlier in the year of it going up into the 30s, possibly even 40. We got there and there. Then we've got this trend coming down into there. Let's draw that. So we've got that sort of shape. It's trading above its 200 moving average. It's been bouncing off that a few times in the last few months. It's a descending wedge type pattern. What have we got? Well, it's trading around this key 61.8 Fibonacci line, $23.33. Breakdown support 21's early part of that, and then 19, that 38.2% line. Upwise 26.5, and then those highs 30.5. Have a look at volume at price. A lot down there. That's where the point of control is, just about $17, just in there. Then we've got this, nice arc, not a lot of volume in there, starting to build at this 24.5 line, and then again not a lot above that over the last few years. So in terms of silver, it's looking pretty flat, all around that 61.8% Fibonacci line, which is about $23.5. Going back to gold for 4-line break chart. Daily charts are here. You can obviously filter the time periods to be more aggressive or less aggressive, what you want to do. I'm using a 4-line break chart. As I explained in other videos, I use a 2-bar entry rather than 4 and 4. I use 4 and 2 to be a bit more aggressive. And at the moment, we've got a short setup building up in the gold world, and that would be coming in somewhere around here at 1950 for that move down. So you can trail that as an order to play that one if you wanted to, if you're thinking of a bearish move in the gold price. And what's going on in silver, let's just change that. I think we probably need the right ticker. I'm using GC1 and SI1 in this analysis. You could use different tickers, but like XAU USD or something like that, but you won't get the futures information. This is like the commitment of trades. This is futures based. Now what have we got on the silver price? Same with the daily chart setup. You can see this new candle or bar building. You could be very aggressive and got in somewhere around here at 22 2/3. A bit more conservative, maybe you wait until it breaks that early $25 before pushing up, but bullish in play setup at the moment. And then into the Renkos, longer term or medium term for gold. We go back to about March, April of this year. What's the takeaways from the chart? Well, a lot of volume, as you can see there, spiking out at around the 1965 mark, where you can see constant price noise. It's all playing around in that sort of zone. Just starting to turn a bit weaker there, looking at the blocks. Next down, 1950, and then the early 1900s, probably go between there and there, about 1900, using a $6 block size for this analysis for the medium term. Here, in terms of the indicator stochastic at the bottom, just starting to head south, waiting for that crossover to happen before I get excited of a short trade. Now, if we got the upside in play, what could we expect? Well, we've got 1987, so call it 1990, then 2000, and then 2030 as our next plays, but not a lot of volume in there at the moment either. So now that's gold in the medium term. Let's have a look at silver in the medium term, and heading to the bottom there, you see the stochastic cross. So we've got a short feel to the market, a lot of price action around that point there, point of control, just about 23.98, $24, where we could see some support, 61.8 Fibonacci line. In terms of volume, you've got that arc there, so we have got that overhead resistance around 25, just over $25. Also had it as support there as it pushed on upwards there. So interesting look there in the chart. Downside numbers, further than that support around 24, you got 23.2, 22.4, then 21.5. Looking for upsides, it's going to have to break through that volume noise at that high over 25, and then you're talking mid 26s and early 28s. Now let's get into the short term. What have we got? Gold again. Let's just go straight into the price action. It's heading down south at the moment. Signal and the stochastic short, looking for hold up support 1960, then 1950, then 1935. Got a lot more volume again down in that sort of zone in here, so we might be pausing, stopping there. Upside, got to get past the 61.8% line, 1971. Again, a lot of volume in there. Then we're talking 1988, 90, just over 2000, and then 2034. So back into silver, short term. What have we got? Again, we've got the stochastic at the bottom, giving us a sell signal. You can see the trend since, well, let's go back there, since end of August. That's Wednesday 30th. It's started to turn around. We had a nice little run up there from mid-August. Got a nice saucer shape with the handle held in there. So we could be seeing something heading off up that way. And have a look at the volume at the price. We've got these arcs in here, which also tie nicely with these Fibonacci lines. So any downside move, expect some slowing down, some stopping around the early 24s, then 23.8, and then 23.5, and then right the way down to the point of control on the chart there, which is 22.8. And to the upside, you can see reversal 24.7, 25.36, and then way up there into the sort of 26s, early 26s. So there you go. That's gold and silver. Briefly, we've wafted through quite a lot of chart information there. Play it back if you want to get the numbers that I've covered off in here. I hope you found that useful. Like I said, we're going to be adding gold and silver in a more regular stream. Hopefully try and do it weekly if we can, to pull you back the information on those two. Very popular day trading markets. And I think we're back tomorrow as well with some more live streams. So check out the channel at TheStopHunter, hit the bell and subs button to receive notifications of when they are coming out. But until then, good luck with the trading, and I'll see you soon.